Hello and welcome to another episode of the Real Estate Investing Club, the place investors go to gain actionable advice, learn about current market trends, and hear war stories from other professional investors out there in the field today. Before we get started, I have two quick housekeeping items to cover. First, if you like the episode, we would very much appreciate a like, subscribe, and share. It is the best way to support the show and keep it running. Second, if you are a new investor looking to get started in real estate or an experienced investor looking to take your investing to the next level, we created an ebook for you that will cover how to find deals that are actually deals, how to finance those deals with little to no money down, and how to exit those deals for maximum value. On top of that, I throw in an insane amount of free bonuses that you'll have access to once you buy the ebook. All we charge is our admin cost to keep the show running. So, if you're serious about real estate investing and want to create both active and passive income as an investor, head on over to the website at therealestateinvestingclub.com and click on the button that says Get the ebook to grab yourself a copy today. So with that said, let's dive right in. Today we have a very special guest with us, ready to drop some investor knowledge on you. So buckle up, grab your pen and paper, and enjoy the ride. All right, welcome back to another episode of the Real Estate Investing Club Deal Review Day. Today we have with us Noel Christopher. Noel was on an episode just previously, probably in the last 3 days. So if you want to check out his full episode, look into the history. Today we have him with us here to go over one of his deals. Again, the format of this, the Deal Review Days is we will ask, how'd you find the property? How'd you find it? And how'd you add value? And then how did you exit, along with a few other miscellaneous questions tagged in there. So Noel, why don't you get us started? Where is the property that you're going to show us today?
So this is a property in Lincoln, Alabama, which Lincoln, Alabama is a suburb of Birmingham and northeast of Birmingham. It's about 20-minute drive to Birmingham. It's near Honda factory. So you have a lot of workforce housing needs in this area. And these are new construction homes.
That goes into the next question. What type of property is it? So it's new construction, single family.
This is a new construction, single family, mixed in a subdivision of owner occupied homes. So there's about 150 homes in the subdivision. About 60 of them are set aside as rentals. So it's a great owner lifestyle for the tenants. This home rents for just under $1,400. The acquisition price was $192,000.
I love it. Before we get into the numbers, though, I'm going to run us through a few questions.
Absolutely.
And you've already kind of brushed on this, but the one that we have on the screen here isn't the exact home that you bought, but you did buy something very, very similar. So we're using this as the example. Why did you want to buy this particular property itself?
For one, I had a relationship with the builder there that's building these homes, and I spent a lot of time working with them to convince them to start doing rentals. I wanted to buy this home for a couple of reasons. One, it's in a great location that has low taxes, low cost of living. A lot of people are moving there. It's near auto manufacturers and all the companies that have to support those plants as well. And it's new construction. So it comes with a 1-year, everything covered builder warranty, not things if the tenant hurts something, but just anything breaks in the house. Then we've got a 5-year just guts of the house warranty. Then we've got all the appliances. The roof is warranted for 10 years. So the deferred maintenance and the just general maintenance on this home is very, very low. And so that's very appealing, especially for getting into a new investment in an area.
I love it. And I know you rarely hear of people investing in new construction, but it sounds like Renter's Warehouse. In fact, you are the head of this new effort in Renter's Warehouse, where you guys are listing new construction homes that are also viable rentals. So we'll get into that into the end. The next question we're going to jump into is, how did you find it?
So I found this because we work with a lot of funds that are buying new construction homes. You can call it build for rent. You can call it new construction homes. And we're finding that the pricing was going a little bit crazy, where the funds were not able to buy these houses because they were too low of yields for the fund. But then when I looked at the yield at a 6.24% net yield, it's a great investment for investors. So we actually created a website in a marketplace to put new construction homes for small investors to buy called rwselect.com. And I like in looking through these homes, I started looking at homes that are good investments, and that's where we're at.
Yep. And when you're talking about, I mean, I'm sure people do get better than 6%, but you think about new construction, 6% is just, there's no headache. It is just a perfect house. You don't have to worry about the sink going out, the windows breaking. Well, windows can still break, but
right.
You don't have to worry about the majority of the issues that you generally have to worry about when you're buying an older construction, older house. So makes sense why you'd want to buy it. And you found it. Sounds like you guys have been working with this builder for a while. How'd you finance it? How'd you go about taking this deal down?
Just for this particular one, it was a Lima One Capital investment loan. Put down 40%.
Awesome.
And so, what's the other thing to comment on this is property management. So you can buy a house, but how do you maintain it? How do you collect the rent? And we use a professional property manager that came with the builder. Our company has property management in the area as well. And so you can live very far outside your geographic region and have the comfort that your home is being managed properly. That's the important part. And that's what's changed the last few years.
Yep, absolutely. That's one. I actually just bought a little duplex out in Euclid, which is right outside of Cleveland. So I'm a big fan of long distance investing. Next question is, how did you add value? This is a new construction. So this is the beauty of this is I'm sure you didn't really have to do anything once you bought it.
No, I didn't have to add much value at all. I think we put some blinds in and a couple of those nicer things, and they didn't come with a washer dryer. We put that in for the tenant, but a lot of investors don't like to do that. They like the tenants to do that because then they're responsible for any issues. But what was great about this too is that when we talk about the 6.22 yield, that is not accounting for appreciation. That's not accounting for rent increases. That's just a cash on cash. I call it yield on cost. So if bought it with cash, what's that yield? So
I love it. So it is a solid deal going forward. The next question is always, how'd you exit? And holding it as a rental is a viable exit. So how did you exit?
I held it. It's being held long term. I plan on holding this home for forever.
And it's awesome because in 20 years, it's only going to be a 20-year-old home versus the home.
Right. Well, if we look at the equity and cash flow, it gets very interesting after a few years. This home is in 20 years. If just the basic appreciation per year happens, we're looking at, $600,000, $700,000, $800,000 asset. Right now, the appreciation rate in Alabama is about 6% per year. But even if you brought it down to the 50-year trend line of 3.52%, I still have a, $450,000 asset in 20 years. So
perfect. And now let's just get into the numbers. That's what were the numbers behind this?
So $192,000 purchase price, rent of $1,375. Property taxes are only $1,400 a year. The expense load was 27%. That's low because it's a new home. So I'm looking at, that expense load may go up a little bit after year 5, but not much because the value is going to continue to go up. The rent's going to go up to cover that. The gross yield on this was 8.55, which is a low gross yield when you look at it on the surface, but that equal to net yield at 6.2%. Yearly cash flow, cash on a cash buy was $12,000. Return on the investment when you take into appreciation, rent increases, things like that is about 9.7% NOI.
And 9.7% plus zero headaches. So I feel like that is that's an additional return on that investment right there.
Absolutely. When I look at the cash flow and the equity, it looks real nice. When I really get into the into the mortgage and things like that, the more you put down, my cash on cash is looking at about a 6.1% there. So I put down that 40%. It still makes it very strong. Even with the debt service, I'm at 9.6 NOI and 6.1 return. I'm very happy with that. My cash flow is, when you buy these investment properties, I look at it the first 5 years, I'm just wanting to make sure I'm covering the debt, making sure the property is being taken care of, and I'm not so concerned about the cash flow. Mm-hmm. I'm not buying the single property just for that cash flow. After 5 years, the cash flow gets really interesting. And when you own multiple properties, it's even better. So
exactly. And that's one of the reasons why single family, I still like it. A lot of people out there are hesitant for it, but I'm on Noel's boat. I'm a big fan of single family, especially when you get them in multiple areas, spread out the risk there, and you buy as many as you would basically when you buy multifamily properties. So usually this is where we exit, but I want to ask a little bit about what you guys are doing over there at Renters Warehouse. So take us into this new thing that you're doing. What is RW? Say that again. It was RW.
RW Select.
Okay.
So we found that we're working with a lot of funds and institutions. They are very yield sensitive. So for example, if they want a 6.5 yield in Alabama, they couldn't buy this property, but I could. An investor can. So we're even finding lower yields. We're finding investors that are happy in Houston with a 4.5% yield because it's a strong market. You're buying the market, not just the house. So you're looking at the market fundamentals. So we created the RW Select site. We just went live a few weeks ago, and we're adding new homes to this all the time. And they're moving very quickly. It's really interesting to see. And we're finding that small investors can pay more than a fund can. They have less overhead. They're more flexible. They're less concerned about just the cash flow of the individual property. They're looking at that future appreciation, that long-term hold. And that's what you should be looking at when you're buying a single family rental. If you're not going to hold it for five or more years, it may not be, if you're buying it and you have to live off the $300 or $400 a month in cash flow, it's probably not the right investment for you. You build that cash flow over time and invest it back in, and you get to 5 years and you own 10 properties or more, it can look really, really good. 5 years goes by pretty quick. So
yeah, yes, it does. Awesome. So that is rwselect.com if you guys want to check that out. So that is the review. Noel, thank you again for hopping on. Super quick one of these reviews. If you guys want to check out his original episode, go back probably a few days. And you can find his full episode where he gets into a little bit more details on numbers and all that stuff. So Noel, thank you again for hopping on. For everybody who's here with us today, thank you guys for hopping on for the deal review. We look forward to seeing you on the next episode.
Thanks a lot. Appreciate it.
Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode and were able to pull some actionable advice that you can go home with and apply to your own investing business. Before you go, I have a gift for you. If you're a new investor looking to get started or an established investor looking to take your business to the next level, I've created an ebook just for you available on the website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find a deal that's actually a deal, how to finance that deal with little to no money down, and how to exit a deal for maximum value. And if you get the ebook today, I'm going to bury you in bonuses, 7 of them to be exact. First, you'll get the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating real wealth in real estate. Then you'll get the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools and systems and even the vendors we use to grow our business. After that, you will get the top 100 best performing keywords pack, which will give you the exact keywords we use to target leads online and generate leads without having to lift a finger. Next, you'll get the contracts bundle for wholesaling and renting real estate, which will give you access to all of the contracts we use in the field to execute all types of transactions. After that, you'll get the Investor's Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automagically from those calculations. Next up, we'll give you the Investor's Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And finally, you will get the Wholesaler's Template for Quick Assignment Cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. I know that is a ton of things to say. I'm glad you were able to stick with it. So you'll get both the ebook and all of those 7 free bonuses when you download the ebook today. All we charge is the admin cost to run the show. So if you are interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page and take advantage of that deal. With that housekeeping item covered, I hope you have an absolutely fantastic day and even better week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.